Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. It's the 9th of December and we have Lee Kian Soon, CEO of Astral Asset Management, coming out of Singapore as our guest today to give us his insights. Kian Soon, welcome to the show.
Good afternoon.
Now, Kian Soon, before I come back and get your insights, let's take a look and see how the numbers stack up across the region. Everything from equity markets to cryptocurrencies. But we start with cryptocurrencies first, and Bitcoin is at 17,198. It's up 2.23%. Ethereum is at 1,228.22. It's up 4.34%. Now, looking across to regional equity markets, we start close to home with you. The SGX is up 0.11%. Bursa Malaysia is up 0.2%. Shanghai is up 0.1%. The ASX All Ordinaries is up 0.47%. The Nikkei is up 1.25%. The Hang Seng is up 1.67%. And rounding up the numbers, we got the Kospi, which is up 0.49%. Now, Kian Soon, what's your view? Kian Soon, what's your view on how markets have performed in the first half of the day?
I think it's all green and good news. It's usually because it's year end, and I think the trading volume is also coming to more to slow down more as we approach. A lot of the fund managers will be taking their vacations in the coming 2 weeks.
So, Kian Soon, I want to take a focus here on an outlook for 2023. Can we start with then taking a look at all three different main regions? So we will look at the US, we'll look at Europe, and we'll look at China. And we start with Europe. What's your prognosis on 2023 for Europe?
I think for Europe in 2023, we have to look at how the events have played out this year. I think in Europe, it's very tough that they have the Russia-Ukraine war, which resulted in a shortage of natural gas as well as fuel. And this is likely going to continue in the coming year. And as a result of the supply side shortage, we have seen that the inflation in a lot of European countries are actually double digits. And I expect this is not going to taper down quite easily, even though the central banks have been actively raising their interest rates.
So that's quite a challenge. But then on the flip side of the equation, on the US, we have the problems around also rising interest rates and inflation, but then slowing economy as well. Walk us through those challenges and how that's going to impact Asia.
I think as a result of the pandemic in the last few years, and we actually went through a period of hyper low interest rates. In fact, it's close to 0 or 0%. So the era of easy funding has in fact triggered what we have witnessed this year as high inflations in a lot of countries, including United States. And the way that the Fed tries to manage this situation is obviously to increase interest rates. And we have seen this year 4 times of 75 basis point with hints that, in coming December, this month, we are going to get another 50 basis point rate hike. So the quantum of rate hike, I think, has come down. But given the strong economic data that we have seen this month in United States, it's very likely that the Fed will continue to increase interest rates next year. I think in 2023, the biggest question for United States is what will be the terminal interest rates that they want to achieve. And I don't see that it's going to end very soon, given the high inflation as well as the strong economic data that we have witnessed. So probably it's going to go about 5%, 6%. And as a result of this, we know that the train is going to hit the wall one day because of these rising interest rates. The economy ultimately will slow down. And the worry is US could go through a period of recession in the second half of 2023.
Now, coming then over to China itself, COVID recovery and low inflation is really the story. Walk us through that and how that's going to impact our region as a result.
I think China has gone through a very challenging year with its COVID zero policies. As a result, we have seen that the economy has slowed down significantly in 2022. And not surprising at all is the manufacturing, production, retail consumption, etc. All the indicators have also plunged down. And not to forget the stock markets as well, as we see in the first 10 months. So the market was waiting. Investors were waiting for reopening of China. It came sooner than expected. The reopening and the measures was loosened in a couple of weeks that as we approach the end of the year. And I think once they reopen or once they loosen these measures, it's very unlikely that they could backtrack and go back to where they were. The reasons were simple. We've seen it for the rest of the world. Once you have marched forward with walking away from COVID-0, you have to learn to adapt. The journey going forward for 2023 for China is not going to be a straightforward one. As I said, the reopening is a matter of how. I'm sure they're going to encounter problems that the rest of the world have gone through as we reopen. The cases in the hospital is going to surge up. They might have to do some kind of measures, in order to curb the cases, in order to make sure that the hospitals do not get jammed up and, the number of deaths are controlled in a measured way. But going forward, this is what we expect of China. And as the rest of the world have witnessed, in 6 to 9 or even 12 months' time, China is going to join the rest of the world, right? Embracing COVID, living with it, and lives move on. And as a result, actually, I think the outcome for China is going to be a positive one, because 2023, as we've seen in all countries that has reopened, the revenge consumption is going to be there, travel is going to resume, and economic growth is going to improve.
Now, Kian Soon, on that note, thank you very much for your insights and thanks for coming on the show. We've been speaking to Lee Kian Soon, CEO of Astral Asset Management in Singapore, on BizTech's Asian Midday Market Watch, powered by the Smart Investor Singapore. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.